Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Let's see what the score is for some restaurant stocks now with Eric Dutram, who is the editor of Zach's Surprise Trader, keeps tabs on what goes on during earnings season with these companies in the different sectors. In this group of restaurants, again, we're talking mainly about the fast food chains. Buffalo Wild Wings topping your list. They report on April 26th.
That's right. Restaurants are definitely going to be in focus the next couple of days. We've seen some good numbers out of the consumer's wallet. They have a lot more money thanks to lower gas prices, better jobs numbers. And we saw a couple decent restaurant reports last week. McDonald's had a decent number. People are still liking their all-day breakfast. So some of these companies are definitely going to be in focus. Buffalo Wild Wings, though, I think some people, the shine might be coming off Buffalo Wild Wings here. If we look to the recent chart here, we can see that the company's had a significant problem beating earnings estimates over the last 5 quarters. We're coming on 5 straight misses, which is obviously not a great trend. And as we can see, over the last 5 years or so, the stock price, it was on a great trend. It was going from the low 50s. It hit about $200 a share sort of recently, but it's really fallen down on harder times here over the last couple months. Gone from 200 down to the 140 range. The earnings ESP right now is negative, so even the most recent estimates have been lower. So not really a great trend. It is a Zacks ranked number 3 stock right now. So not high expectations going in this number, and given their track record, it's hard to really like the stock at earnings.
All right, and we're sitting here talking about all this on the week of April the 25th. So Chipotle is also on your list. Now, they've had some negative issues.
To put it mildly, yeah.
Right? But still, I'm seeing the analysts refer to this one as a growth stock.
Yeah, and I kind of think Chipotle still has a lot of long-term potential. They've got some decent other brands they're trying to flesh out a little more, like their Shop House, an Asian concept, and they're trying to do a pizza concept as well. Mm-hmm. And I think eventually Chipotle will return to a little bit more prominence. But if we looked at the recent chart here, that's probably not going to be the case in this quarter. We can see their current consensus for earnings. It's really fallen off a cliff here. We can see a dive down here to really low levels, and pretty much follows the stock as of late. The stock's been an atrocious performer here. It was almost at $800 a share. Now we're below 500. Some of the recent estimates here have also been pretty bad. We're still at a negative earnings ESP in this stock as well. It also has a Zacks rank sell. So not a great story here. It's expected to lose money this quarter. And I mean, this is a company that was an investor darling for years on end.
Yep.
So this is really a shocking turn of events for Chipotle. And it seems like their turnaround story is going to take a little bit longer to play out. It's hard to really like this stock given these recent numbers and the ongoing health issues that are still in a lot of consumers' minds.
Plaguing the company, yeah.
Definitely.
All right, then there's Restaurant Brands, and for those who don't know, this is the parent company of Burger King and Tim Hortons.
That's right. And they've had a little bit better track record as of late. This company right now has a Zacks rank number 3. We haven't really seen any recent earnings estimate activity, though. ESP of 0. They're expected to report 20 cents a share in earnings coming up. This is kind of a growth stock. If we look to their PE ratio, it's about 32, compares to the industry average of about 22. So, investors are definitely paying for a little bit of growth in this company. And if we look to some of their other recent metrics, we can see that the company has seen solid cash flow growth, when compared to the industry overall. Their margins are a bit higher than the industry, 9.2% compared to the industry average, less than 5%. So there's definitely some things to like about this company. Just to note that their debt to equity ratio or debt to capital ratio is a bit higher than the industry average. So this might be a little shakier of a play, but it's certainly looking a bit better than some of the other ones that we highlighted. It was recently a sell, just got upgraded to the hold category. So, they're hoping to, I think, follow in McDonald's footsteps from last week. And, this could be one to watch in the space going forward for higher growth potential.
All right, and then finally Domino's Pizza. And I'm seeing this referred to as one of the biggest winners in the market in recent years.
Yeah, if we look to this recent chart, we can see Domino's has been one of the best stocks to own over the last couple of years in the restaurant space. Yeah. We can see shares were about $19 a share back in 2011, 2012. and just a nice steady increase over the last 4 or 5 years here. And another good thing to note for investors is this consensus estimate, how it's risen each year in each of the last 5 years. We have seen kind of things flatline a little bit lately, but some of the more recent estimates have been a bit higher. A nice earnings ESP here of just over 2%. It is a Zacks ranked number 2 buy, and we're looking for 97 cents a share in earnings this quarter. It's been a really strong performer. It's hard to bet against this company. They've really done a great job of embracing technology with their various crazy apps out there, and no click ordering, I think, is their latest thing.
Right.
But this seems to be one of the better selections in the restaurant space right now. The restaurant industry does have a nice industry rank, so if you're looking at a company this week, this could be one to look at, especially over some of these other ones that have that negative earnings ESP. That's always something you want to watch out for in earnings season.
All right, thanks for that. Don't forget, you can always find more information during peak earnings periods, but generally speaking as well, as far as earnings go, on Zacks.com. That's our website. If you're not there already, you can get on over to the homepage and link to all of the information from there. With Eric, I'm Terry Ruffalo.